Welcome to episode 78, What is Title Insurance? I'm your host, Sean Patrick Maloney. Thanks for joining me this week. I'm here with Paul McRae of Sinc Law from Braintree, Massachusetts. He's the business development manager over there, and he knows a lot about title insurance. So we're going to talk today about title insurance. How you doing today, Paul?
Good. Thank you very much, Sean, for having me today. Appreciate it.
Why don't you tell our audience a little bit about Sinc Law and yourself and your history with title insurance in general?
Well, Sinc Law is a boutique-style real estate law firm. There's 6 of us over at Sinc Law. I am the business development manager there, and I network with loan officers and real estate professionals and real estate agents and brokers and sell our title services. We are a settlement, title, and escrow real estate law firm. That is what we specialize in. We represent buyers, sellers, and if you're refinancing or buying a first home, we represent both sides of a transaction.
Excellent. So, Paul, tell me a little bit about what is title insurance?
Title insurance it's a risk prevention versus a risk assumption. So it's different than other insurances when it comes to real estate or insurance that you would have in your life. Like auto and health and life are risk assumption. They're assuming that you're going to get in an accident and you're going to need insurance and you're going to need to protect yourself because they're assuming you're going to get sick, die, or get in an auto accident. So title insurance, when it comes to real estate, different than homeowners insurance, it is risk prevention. It protects your interest in the property. There's 2 types of insurance that we'll go over in a minute, but the title insurance protects the lender or the homeowner, or both, depending on what type of policy you get, your interest in the property for any type of losses of ownership problems that may have occurred or arose before you bought the home.
Excellent. So are there different types of title insurance?
Yes, there are 2 different types of title insurance. There is a lender's policy, which is lender's title insurance, and then there's an owner's policy, which is owner's title insurance. The lender's policy is required if you have a mortgage on your property, in all cases, whether you're buying or refinancing a property. The lender's title insurance protects the lender's interest in the property for any type of loss or future claims to title from previous heirs, or if it was a divorce years ago. Anytime the title changed hands, it will protect you. It will protect the lender in a loss. So the lender's title insurance protects the lender. And if you're buying a home, that policy protects you up to the loan amount. Okay, so the lender is concerned about the money that they're putting up for the home, for you to buy it, or to refinance it if you're switching lenders. But the lender's policy protects you up to the loan amount. Then the owner's policy protects the owner of the property for any type of loss that would occur in any type of back title issues or defaults or defects in title that arose before you purchased the property. And as an owner, the owner's policy protects you up to the purchase price. Okay? So If you're putting 20% down and you only have a lender's policy, you're at risk of losing that 20% as an owner if you don't have the owner's coverage.
Okay, that makes sense.
Okay? And any type of title defect or something that could come up where someone would put a claim against title or a previous lien holder on title that is now claiming rights or equity in that property, the mortgage company that you have the insurance with will pay for any type of legal representation that is required for them to clear you or clear the title for you. So the owner's policy, you're protected against any type of legal fees that might arise in you protecting your home or your title. So the owner's policy covers the legal fees if anything were to arise from the lender.
Sure. And when would
I'm not sure that makes sense, but
yeah, no, I get it. I think I completely get it. It's you could buy something potentially with a problem that you didn't even know about, and it comes up later on, and without this type of protection, you're on it. And with this type of protection, financially, you're at least covered by the lender's side for the amount that you finance, but you really should bridge the gap, similar to buying a new car. When you get in an accident within the first year, you're not going to get your full money back unless you buy that gap insurance.
Right.
So it's almost like, the owner's policy mentally, it's kind of like almost like a gap insurance, because you could, that down payment that you saved for your entire life, you could potentially lose in one quick swipe.
Yeah, one title claim against the property.
Sure. And that a lot of people, I can speak. I crashed a motorcycle in 2004, and I got no claim because when I went in, I said to the person, I crashed my motorcycle, I'll be dead. Well, I'm not.
Wow.
I lived, and I lost a bike because I broke it in half. But I made the option and choice at the time, and it was, $200 or $300 for the full coverage. And we all make these decisions because we think, it's not going to happen. But the reality is, if I had had that coverage, it really wouldn't have killed me to pay the price for it, but it would have got me a lot of favors in this modern life. So it's really changed my idea on insurance. And sadly enough, a lot of us, we have to wait till we've been burnt to insure ourselves properly. But it's like, you already missed your opportunity to have been insured properly. Mm-hmm. I guess it's no different than saving for your future. You can talk about you'll do it someday, but it's usually too late by the time you do. So when does somebody purchase title insurance?
The title insurance is purchased at the closing. And I'd like to point out the lender's insurance, which is required if you have a mortgage. So you have to have lender's title insurance. You cannot have a mortgage on a property without it. And funny enough, the borrower or the buyer, the homeowner, pays for the lender's policy. Yeah. They're paying for a policy that protects the lender. Why not pay a little bit extra for the policy that protects yourself? Mm-hmm. So it's always purchased at the closing. And unfortunately, it always seems to come up a few days before the closing when all the title questions start happening, questions come up because the borrower receives the paperwork 72 hours prior to closing now. By law, they have to get a closing disclosure, which outlines all the fees that are associated with the closing that they're going to sign on the day of closing. And title insurance comes up on page 2 or 3 of the closing disclosure, and it says lender's title insurance, and there's amount. And then it says owner's title insurance, and then in parentheses it says optional, and then there's that amount. So that's always the question, well, if it's optional, why do I need it? You've already done a title examination. Right? You've reviewed the title, you went to the registry of deeds, you pulled all the records. Well, on a purchase, we only go back 50 years. Okay. What's that, 1970?
Yep.
Around here, some of the houses went up in the 1600s, 1700s.
Yeah, we actually just had a transaction that was about to close, and the policy found that the person 3 back had an improperly signed off heir who didn't, who they ended up having to hire a personal investigator, and the person had to travel to find the person in another country, and they had to try to figure out all these matters. And the owner was very lucky of this home that they had a title insurance policy.
The owner's title insurance policy, exactly. Correct.
And if they hadn't, they didn't know. They bought this house. This is 3 back from them. They completely thought they were in the clear. 3 back? No way. And then during the doing of the due diligence period, somebody had discovered this, whatever reason.
Someone came across it.
Further back than other people had been or whatever. Someone found it, and in the long run, it did close, but it took time, energy, and money to get there. And if they had not had that policy, they'd have been out on their own. Yeah, and they would have had to pay for that. Whatever legal fees that were associated with clearing that title defect or title cloud up, they would have been responsible for paying for that. In the owner's policy, the title insurance company covers those fees, and they'll indemnify the policy. They'll indemnify the title so that you can move forward smoothly and seamlessly without having it cleared up in the meantime, so you can get to the closing table. And in the background, the title insurance companies are worrying about clearing it all up because you have the owner's policy. So you can still move forward and get things done, on a timely fashion and meet those purchase and sale deadlines because the owner's policy is so important, and they just allow you to go ahead and close because you have that policy. And for people out there that chose not to, but now are listening to this and thinking, maybe I should get it, can they buy it after the original closing? Sure. It is optional. No one can ever tell you that you don't need it because it's completely up to the individual. But if you decide to only get the lender's policy, which you're paying the lender you're paying the lender's protection at that point. But if you only chose to purchase the lender's insurance policy, at any time after you close, you can go ahead and contact a real estate closing office or a real estate closing attorney and tell them that you do want to buy the additional coverage for the owner's policy. And at that point, you only pay for the difference, which is good. And when you do buy an owner's policy, just so you know, you're not buying an owner's policy and a lender's policy. The owner's policy includes the lender policy. So it's a little extra money, but you're getting both. The lender is getting their
security by being insured through the title, and then you're getting your ownership.
Sure. Excellent. So what have you seen happen?
So yes, sorry, long story short, you can buy it after.
Yeah. No, that's great.
Yeah.
I think, people...
And you only pay the difference. So
sometimes you don't buy what you don't know, and then you might be listening to an episode like this and go, geez, I didn't even realize I did that at the closing. You can go back and you can look at your closing package that was given
100%.
to you. You could call, reach out to whoever did your closing. You could reach out to Paul's office and they could tell you. There's different people that can help you look up what your policy is. You could call the company if you have a policy, as far as if you have a mortgage. If you don't have a mortgage at all, that's also another place where we didn't even mention it. We don't even get to get into it. But if you want to protect your asset, you may want to buy that policy if you own that house cash, because you could be in big trouble. Oh, what have you seen happen that makes you so adamant about policies, and what ones have come up in your travels?
I would say there are a lot of very common ones. Some very common title insurance defects are missing assignments. And, back in 2008, 9, 10, 11, there were a lot of mortgage companies that went out of business. And as a homeowner, you get a letter every so often saying, hey, your mortgage is now going to be paid to XYZ company. They buy and sell mortgages on the secondary market all the time. You might have closed with Bank of America, and now you pay specialized loan servicing, or you pay Dr. Cooper, or Mr. Cooper, something like that. So a lot of those chains of title are broken when a mortgage company sells the mortgage to a new servicing company, and they forget to record the discharge from the previous mortgage company, or they forget to record an assignment.
Sure.
A lot of those companies back in 2008, 9, 10, and 11, they're not even in business anymore. It's very hard to chase these items down from a bank that no longer exists. Those are very common ones.
Yeah, and unfortunately, the consumer has no choice of whether that loan's getting sold. So
correct.
Whether you want to work with them or not, whether you like their business or not, the only way to avoid this is portfolio lending, which isn't available everywhere.
Right.
And often, even in portfolio lending, they still reserve the right that if they ever decide that they want to offload that asset,
100%.
they can. And so there's no security really in the whole idea of that your mortgage is sitting with the company you originally went with, which is kind of funny overall, because I know we've met with clients Firewise and they say like, oh, I'm going with Rockland Trust because I trust those guys. And yes, they do process the original thing, but about 45 minutes later, it goes through an electronic transaction and in somebody else's account already.
So those are the common ones. We've seen a unique one recently where the homeowner was selling the home, and 2 prior owners ago, upon dying, the 3 owners ago died. They gave right of first refusal to one of the living heirs, and they sold the house without contacting that heir.
Oh, wow.
So we had to track him down. He was in Seattle, Washington. He was a teacher, still is a teacher. We found his number written on a piece of paper that was recorded at the Registry of Deeds, and his last known number was written on it. And I called it, and his ex-wife answered, and she helped me track him down. And he wanted nothing to do with the property, but someone missed it 3 transactions ago, and now
like a primetime murder mystery.
Right.
That's the way down.
You can't sell the property with an open right of first refusal on the property, because the person selling the property that we were representing now didn't even have the right to buy it legally then, because the attorney or the title examiner at the time missed that document.
Sure.
And it was 3 owners ago. So it's stuff like that will come up. Listen, we're all human, and people make mistakes and people overlook things. So people say, why do I need title insurance if you just did the exam? Well, we're only human. You got to, something might come up, and something like that did come up recently. We found them. We FedExed him the paperwork to sign off on it, and he wanted us to draft the document so he could never have to worry about it again, and no one's going to try to track him down again because he doesn't want the property.
Sure.
Apparently, the first transaction after the person deceased, he signed it once, and then 2 other transactions happened after that. We were going to be the 4th, so he didn't want it.
It was just lost in time overall.
Yeah, so that was difficult. So that's a cloud in title. You can't convey a title, a deed. You can't sell your property to somebody else with something like that overhead, because you can't get title insurance for it. The lender, the insurance company will not insure cloud on title unless you have an owner's policy.
Okay. So does every property have to have title insurance?
only properties that have a mortgage on them. Okay, so if you are financing a home and it has any type of mortgage on it, the lender requires title insurance. If you buy a house cash or you inherited a home that doesn't have a mortgage on it, it's not required to have. You don't need title insurance on a property that's owned outright. So if you have a mortgage, it's required. If you don't have a mortgage, it's not required. But it's always recommended to have an owner's policy on a home that doesn't even have a mortgage on it and is not required. But an owner's policy is always going to protect you, especially when you're buying a house cash. We see a lot of houses at foreclosure that are won at auction, and people buy them cash, or they buy distressed properties cash. Those properties won't carry a mortgage, but especially in a foreclosure situation, there's a very big chance that there's going to be something in title, in the chain of title, that might be a little bit cloudy. So you always just want to protect yourself, especially if you bought it at an estate sale and there was someone that had passed away and it went through probate, and then the heirs are selling the property. Or if you're buying a property through a divorce and you bought it cash, I mean, there's something.
So obviously with COVID-19, we're going to have a lot of interesting title things coming up because we lost a lot of people.
Unfortunately, we did. Yeah, unfortunately, we did. But yeah, it's always recommended, if there's no mortgage on the property, to still buy an owner's policy. But if you have a mortgage on it, yeah, it is required. The lender requires it. The minimum would be the lender's title insurance policy if you have a mortgage on it.
Awesome. Well, thank you so much for joining me, Paul. Why don't you tell everybody where they can reach you and a little bit just about what Sinc Law actually offers for products and anything else that you want to tell them today?
Well, we are a full-service real estate law firm located in Braintree, Massachusetts. We offer discounts on title insurance, which is always a bonus. We actually offer complimentary purchase and sales agreements, which I know can save quite a few $100s, especially if it's a first-time home buyer. We offer 10% discounts on all title insurance for first-time home buyers as well. But yeah, if you're buying, selling, or refinancing, Sinc Law is a full-service real estate law firm that can help you out. And we're in Braintree, Massachusetts. It's sinclaw.com. That's sinclaw.com. And we're on Instagram at Sinc Law and also Facebook, Sinc Law.
Awesome. Well, it was a pleasure talking with you, Paul. I'm really appreciating your time.
Thanks for having me. I appreciate it.
Thank you, everyone that listens. Make sure to tell your friends, family about the podcast. Make sure to jump over on Facebook, check out the group, check out the blog on our website. Let me know if you have any questions, comments, or concerns, and I will talk to you next week. Thank you so much.